The stock market is set to explode upward. We are set up to have an unbelievable bull market. And I want to explain to you guys, I want to go into depth today on exactly why I am so bullish for the remainder of the year. Now, it's hard to make short-term predictions. I'm usually like looking long-term out. But when I just look at the short term, what's going to go on over the course of the next, let's say, 6 to 9 months, I am very, very bullish. And I'm going to kind of go through 3 different things with you guys today, and you'll kind of see why I am so bullish on the stock market overall and kind of why I see it going up. So, hey, and by the way, make sure you follow me on Instagram and Snapchat. Links down there in the description. All the cool people out there follow me on there, so make sure you follow me. All right, first up here, guys, one of the first things I like to look at when I'm thinking about like the overall stock market and where I see stocks going and whatnot, I like to look at the forward PE ratio. This is one of the biggest factors for me by far, okay? Forward PE ratio. The forward PE ratio, basically what that means, you know, looking at stocks from the perspective of how much that company is going to earn over the next 12 months versus where that stock price is at, okay? Times when the market is really elevated, you'll see a lot of forward PEs over 20, okay? When you're in a more of a fair market valuation, you'll see a lot of forward PEs around 15. When you're in super undervalued, you'll kind of see, you know, 12 and under, all right? And basically it just kind of shows you, you know, where the stock market is valued right now, kind of going into the next year, okay? Where are these stocks valued? And what I see out there right now is I see the biggest amount of companies I've seen in a long time that have forward PEs of 12 or under right now. When I look at stocks right now, if you go through the Dow, you go through the S&P 500, I see a massive amount of stocks that had forward PE ratios under 12 right now. A lot of them even under 10, guys. A lot of companies, okay? And this goes from a situation where, you know, it wasn't that long ago where I was looking at forward PE ratios and it was like hard to find ones that were under 20. Now it is super easy to find ones under 15 and pretty easy to find ones under 12 right now. So we're in a market position where on a forward PE basis, the stock market looks very undervalued. Now, is it every single stock is undervalued? No, okay? There are still some stocks that are very, you know, overvalued, let's say, or, you know, maybe are fair valued. But when I just look at the massive list of companies, I see so many right now that have forward PEs of 12 or under. Just go through the S&P 500, just go through the Dow, just look at those stocks, tell me what the forward PEs are. You're gonna see a lot of them that are under 12 right now, guys. That's a very bullish sign to me, because when you're up here, where's your room to grow? Where's your room to grow when you're at, you know, a forward PE of 20 plus on stocks? You don't have much room to grow. The stocks are already, you know, valued so high. You know, in a 15 situation where most stocks are 15 plus, you're kind of in a fair valuation. I'm seeing tons of stocks right now that are 12 and under, guys. I mean, we got companies like Facebook right now that have tons of growth ahead of them, right? Over the coming years that are going to grow much bigger than they are now. We have companies like that are at forward PEs of like 17, 18. Those companies should be, you know, 25, 30 plus, you know, so there's a lot of stocks like that. So forward PEs is the first part. The second part on why I think, you know, stocks are set up in a position where they can explode for the remainder of the year and whatnot is when I look at taxes, okay? Taxes is a huge, you know, effect on the stock market. Taxes, you know, if there are less taxes on people, they have more money to do other things. They can spend that money, they can invest that money. So when we think about it from an individual standpoint, okay, you and me, just individuals, you know, taxes going down for just about every single individual out there, it just means more money probably going into that 401k or things like that, okay? So let's say a person makes an extra, you know, $100 a month because of taxes, you know, because their taxes dropped a bit, you know, maybe like $50 that goes into, let's say, you know, their stock market accounts are 401ks, another $50 just goes into their pocket and things like that. Well, it's more money for them to spend, but at the same time, it's more money going into the stock market. You might say, oh, it's only $50 here and there. Well, when you think about it times millions or tens of millions of people, that's a lot of money to be deployed out there in the stock market, guys. So that's a very big factor. So that's on individuals. Then also taxes, we got to think about it from a corporation standpoint. Corporate taxes just got lowered the most, well, certainly in my lifetime, but maybe ever, okay? Corporate tax rate just went from 35% to around 21%. That's unbelievably low. And what corporations do, will they add some more jobs? Yeah. Will some of them add some more factories and do things like that? Yeah. Will some of them up dividends? Yeah. But a lot of that money, guys, a lot of that money is going to end up being used for share repurchases, okay? For share buybacks. A lot of that money is going to be used for share buybacks. So when that money's deployed for share buybacks, what happens is that puts a floor under a lot of stocks where, you know, the company is buying so many shares back that it's hard for that stock to go down much, right? Apple's a great example of this. Apple is buying shares back on such a massive scale for the last few years that's hard to really, even in times where, you know, oh man, Apple's iPhone sales might not be good, it's hard for that stock to really go down in a massive way. It's hard to get that stock down in a massive way because Apple's one of the big shareholders, you know, one of the companies that's buying the most amount of shares. Look at the amount of money Apple is spending on share buybacks right now, okay? Also, those share buybacks, once they purchase the shares, those shares go bye-bye, it makes EPS look even better, guys. As long as they can keep that net income the same or even make it look higher, yeah, that's just is a phenomenal thing, guys. So corporations have more money. They're going to be spending a lot of that money on share buybacks, repurchasing their shares, and then individuals are going to have more money. It's just more money to go out there in the market and deploy and be invested, okay? And then when I kind of think about the third thing, I kind of think about the worries, okay? We'll just say worry, which is a lot of what's held the stock market back recently, okay? When we, you know, topped out around 27,000, now we're in the 23, 24,000 range, right? It's mainly because of worries. It's not because of economic, you know, a downturn or anything like that. Like the economy's fine, things like that. The economy should actually heat up in the back half of the year, and that could kind of be like reason number 4 that I won't even mention, is the economy is expected to get even stronger toward the back half of the year. But the worries, guys. So right now, you know, the thing is like, oh, we're going to be in a trade war. We're in a trade war, this and that. That's a worry right now, right? Anything that comes out of Trump's mouth is just like the market jumps all over it right now. What ends up happening every single time is eventually the market starts to forget about that situation, okay? Whatever, you know, Trump starts saying, it starts mattering less and less and less. That's just what happens with the market. It happens every single time. North Korea situation, right? When you know, that was like, what was that, last year? Kim Jong-un would, you know, say, you know, do some propaganda video. He's going to send nuclear, you know, warheads over the U.S. or whatever. And, you know, Trump would fire back at him, call him Rocket Man. At first, that got the markets to go down. Oh my gosh, we're going to have a nuclear war, blah, blah, blah. And then what ended up happening, as they made threats still, it mattered less and less to a market, and a threat could get made, and then the market wouldn't even go down that day. The market would still go up, and it would just be, you know, another normal day. That's what ends up happening as time goes on. The worries start to not be as scary, and the market starts to forget about them, okay? And so that's a big factor. And then you have on top of that, economic growth should pick up in the back half of the year. Earnings should be very strong in the back half of the year, meaning the last, like, you know, let's say 6 to 7 months of the year. And so we're set up in a position right now where we could have a very strong bull market. You know, who knows? It might not happen. All I can tell you is as long as the economy stays strong and if the market stays where it's at, guess what's going to come down even more? These forward P's are going to come down even more and make things look even more undervalued. So net debt, it's regardless of which way the market goes, I'm in a win-win situation. If it goes lower, I buy more stocks and I'm going to make a ton of money over the future years. If it goes up, I'm going to make a ton of money on the positions I already own. So I'm in a win-win situation. Are you in a win-win situation? I hope you are, guys. The only people that usually aren't in a win-win situation are people that are judging things off short-term basis and people that are in a situation where they're 100% in the market and they have no new money to funnel in. That's not a position you ever want to be in. You always want to have some money on the sidelines so you're ready to put some money in. You always want to be funneling money in every single month into your accounts and things like that. That way you're always in a win-win situation. I can't lose in the stock market. Like I literally can't lose because, okay, stocks go down. Great, I'm going to buy them and I'm going to make a crap ton of money on them over the long term. Am I going to make money on every single stock I ever buy? No. Am I going to make money on 95+% of the stocks I buy? Yes, I'm going to win over time, okay? And then, you know, if stocks go up, I already own a ton of stocks, so I'm just going to make a bunch of money. I'm literally in a win-win situation. That's the situation you want to put yourself in, okay? Don't put yourself in a lose-lose situation where you're all in on the market all at once. You don't have any new money to funnel in because then you're stuck. The market has to go up or you're screwed. The market has to go up in the short term, you're screwed. And then when the market starts going down, you start panicking, you start selling, you start worrying, oh my gosh, I got all my money invested already. I don't have any new money to funnel in. that's not a situation you guys want to be in. So, but anyways, we're set up to have a really strong back half of the year, and I'm really excited. But we'll see what happens. You know, it's possible the stock market doesn't go up, it doesn't go anywhere. We just have to see over time, guys. Anyways, I want to hear your opinion on this. What do you guys think about this? I would love to hear your opinion in that comment section. Once again, make sure you follow me on Instagram, Snapchat, links down there in the description. Thank you for watching and have a great day.